You know who are my best clients? Dave Ramsey fans. Those are my best clients. When I have Dave Ramsey followers come to me, they have a ton of money. But guess what? They don't agree that their money should be lost in a market crash. They don't see 15% rates of return. They are not creating cash flow. And so all of those things we get to have with the infinite banking concept, and we get to have that guaranteed uninterrupted compound interest with a company that's been around for 200 years. Welcome back. Thank you very much for being here. I appreciate it. All right, today, let's get into talking about some of the hang-ups of the infinite banking concept. And, there is a lot of noise. And I have on the Farming Without the Bank podcast this week, I talk about the fact that this is not an investment and the fact and all the noise and all the stuff out there. But let's talk about some of the hang-ups and some of the things that people are, sitting on the sidelines watching and not taking that next step forward. And so I'm going to try to get through 5 of them today. We'll see where we end up because, I don't like to go too long here. But the first one really is the complexity of whole life insurance. People think that it's this really big animal and it's really hard to understand. There is sort of a lot there's not even a lot going on. There's different riders that as an agent we can put in the policy. But let's be honest. If I can figure it out, really, it's not that difficult. It's not like I have a PhD in, finance, for heaven's sakes. And you don't need to because it's life insurance. This is what happens. You pay a premium, they provide a death benefit. And in the middle of that is this cash value column. That column is just a part of the death benefit they allow you to use while you're alive. The big piece of that is just how are we structuring it? What company are we putting it with? And so it's not a super difficult product if you have somebody that can explain it to you. And explain it to you over and over if you need it explained to you over and over. A lot of people make it hard. And so when we're talking about dividend paying whole life, there is not a rate of return. There are no fees. There's no administration fee. The cost of insurance doesn't show up on your statement because it's all wrapped up into the cost of the premium. Where in universal life, variable, and index, that's not the case. And so what's confusing to some people is the fact that there's just a lot of different types of insurance and the terminology of what people are using is not correct. The whole life policy itself is not complex. It's actually super easy because it's just whole life with a couple of riders. And as long as somebody explains that, not a big deal. What's complex is how many stocks am I invested in that mutual fund? What percentages? What is their rate of return? How are you figuring the actual rate of return? That kind of stuff is what ends up being complex. The second one is the fact that people think it is a huge commitment, that I'm going to have to pay this premium forever and I'm not going to be able to afford it and I don't have access to any money. Well, again, if you understand the infinite banking concept, you understand you have access to about 75% of your money immediately because of how we're structuring it, because we're putting on that paid up additions rider. And so if you are out there and you have read my book and you have read Nelson's book and you can see that there is access to cash right away, and you are like, oh, well, but Uncle John says that there's not. That's because Uncle John hasn't done his due diligence and understands what's happening. If Uncle John has a whole life insurance policy and it is probably structured so all the money goes to the death benefit portion, no riders, then guess what? He's not going to have access to the money right away. Is it a commitment in the fact that you have to pay your premium every single year? Yes, absolutely. It's like a commitment of having to pay a mortgage every single year, having to pay rent every single year, having to pay for your homeowner's insurance, your car insurance. I mean, come on, people. Like this is just a commitment that, hey, I'm buying life insurance because guess what? You're going to die. Yes, my friends, you're not getting out alive. And so is there a commitment? Yes. Should it be comfortable? Yes. Should you understand how it works? Yes. Okay. Other hangups are people doubt about rates of return. Oh, I doubt it's going to get that rate of return. I talk about this in the Farming Without the Bank podcast this week. There is a guaranteed column. Guaranteed by contract. That is what you are going to make. So here's the thing. If we are doubtful about our rate of return on one hand, but we are chasing and gambling with our 401ks and our IRAs on the other hand, does that even logically make sense? On the infinite banking stuff, we are showing you how to think about money, right? Part of that, remember, Nelson said infinite banking is imagination, reason, and logic. Logical. Let's just talk about the fact that in a whole life insurance policy, you're getting a guarantee. And then we're still questioning that it's not a big enough rate of return. We're having liquidity of money. We have access to our money immediately, so we can go do other things to make more money. What is the rate of return on that? Remember, Nelson talks about the seen and the unseen. What is the rate of return on the unseen in the policy? Use your logic. And so some of these things that are hanging us up because it's just so abnormal. We're scared to do it. We're scared to talk to anybody because we're taking advice from people that don't have any money. So if we're taking advice from people that don't have a bunch of money and they can't retire because they haven't done the right thing, those are the people you're listening to? Or are you going to listen to the people that are successful, that have the money, that have done it? And so I have guarantees by contract. My policies that are 14 years old are doing exactly what they said they were going to do because it's contractual. That's what they have to do. This is not about a rate of return. Go listen to the other podcast. The other hang up for some people is trust in the insurance company. Now, this one I can understand because of the fact that we don't know anything about these companies. I've talked about this before. Do you ask as many questions about the companies that you're invested in your IRAs and 401ks? Do you ask as many questions of the bank to make sure that the bank is viable and they're not going to go out of business as you do about a life insurance company? Think about it. You have somebody yipping in your ear saying, well, that company's going to go out of business. My friends, what happened with Enron? What happens with the market? What happens with banks that close? At the time of this recording, in October of 2024, guess what? A bank closed in Oklahoma. The feds had to come in and rescue them. Are we looking at banks? Are we asking these same questions of our banks? Are we going in to the board of the bank and saying, hey, I want to see your financials. I want to understand. Are you going to FDIC.gov? Because yes, you can. And you can look up the bank financials and you can see what's happening with your bank. Are you doing that? Because we're asking all these questions of life insurance companies, but we're not doing it on the other side. If you're going to put that much due diligence into life insurance, put that much due diligence into every aspect of your life with your money. Do I care that that is a concern? No, it should be a legitimate concern. You want to make sure you are with a good company. I make sure that my companies are viable. I'm talking to the CEOs of the company. I'm talking to the CFO. I want to make sure that these guys are smart and they understand what they're doing and they have our best interest in mind because that's where my money is. And so I'm not condoning people for that, but think about the fact that we don't trust the company and they've been around for 200 years, but we automatically trust the bank or we automatically trust the stock market. And we put our money there even though we know we're going to lose it. Guarantees, my friends. Some people are uncomfortable with loans against their policy. The only reason that anybody would be uncomfortable about that is if they just don't truly understand how the loan process works. And you guys have heard me talk about that about 10 million times. And so if you borrow against the policy, you are the banker. You become the banker. Hence the title of Nelson's book. So you're going to have to put your little banker hat on and you're going to have to say, Mary Jo, how do I want to pay that back? Do I want to pay it back over 10 years? Do I want to pay it back over 5 years? Do I want to pay it back in a year? Do I want to pay it back monthly? Do I want to pay it back yearly? How do I want to make that payment? Do I want to pay interest only? It's going to depend on what we use the money for. But you get to decide that because it's your money. You are in control. If you take money out of your savings account, do you ask the bank how you need to replenish that? No, you don't, because you have 100% control. If you use cash that's under your mattress, do you ask the mattress how you're going to pay that back? Nope. You ask yourself, right? You're like, I need to get that paid back. Am I still going to be able to save every single month or every single year? I'm going to get a bonus and I'm going to put that back in, whatever that looks like. And so when we are borrowing against our policy, it's the exact same thing. We can put that back whenever we want. We can pay that back however we want. Because guess what? If we die, the loan is paid for with the death benefit. The death benefit is essentially collateral to that loan. And you're going to die, right? Because I just said it earlier, you're not getting out of here alive, my friends. And so if we are in control, that's great. If we have no self-control, that's not good. Oh my gosh, speaking of self-control. So I saw there's this dude on TikTok that he is always talking to people about money. And, I've watched him a little more now, but he loses his ever-loving mind, which I would as well. There are people that just absolutely cannot control their money. They need Dave Ramsey, but they won't even go see Dave. Like, they're not even smart enough to go, hey, Dave, I need some help. No. We need to fly to get our hair done. And we need to, have the Botox. And we need to have the boat we can't afford. And all the stuff to show off to the neighbors that we have all this nice stuff. It is absolutely insane to me. Those people should not be bankers. They should not own their own bank. If you cannot pay your bills and you cannot manage $1, you're not going to be able to manage $1 million. It frankly does not matter. And so, is it scary to borrow money from yourself? I don't think it is, but for some people it is. Because they're worried about, how am I going to pay it back? How is the company going to transfer the money? What's going to happen if I don't pay it back, right? All of those things. And nothing will happen. You have the freedom, but it needs to be paid back. You need to be an honest banker. So I got through 5. Good for me. Good for me. Okay, I will finish the other 5 next week. But think about use imagination, reason, and logic when we are really looking at what is happening within infinite banking. What is stopping us from taking that next step forward? Is it Uncle John and Aunt Susie who don't know anything? Is it mom and dad who don't know anything? Because they've been sold what they say is whole life, but it's not whole life. Are we worried about a rate of return when something is guaranteed and we have liquidity to go do other things with? I used to say that this is good for everybody, and that's not the case. This is good for people that want to manage their money, that want to have liquidity to their money, that want to have guarantees. This is not good for people that can't pay their bills. If you can't pay your bills or you're not a good saver, this is not for you. You know who are my best clients? Dave Ramsey fans. Those are my best clients. When I have Dave Ramsey followers come to me, they have a ton of money. But guess what? They don't agree that their money should be lost in a market crash. They don't see 15% rates of return. They are not creating cash flow. And so all of those things we get to have with the infinite banking concept, and we get to have that guaranteed uninterrupted compound interest with a company that's been around for 200 years. So when we really educate ourselves and do our due diligence, a lot of these fears go away. But I'm going to address another 5 next week. Let me know if you need me. Mary Jo at withoutthebank.com. Grab the book, schedule your appointment, and then we'll talk. All right, you guys, you have a fantastic rest of your day.